Good evening, everyone. My name is Niyi Adweole, host of the Ekabo Home Financial Freedom Mastermind Group, and I'm pumped to be joining you on this Wednesday to celebrate. We're almost at the midway point of the year. Month five is almost over, and it's crazy just to think how quickly it's gone. And so, the goals that you really set at the beginning of the year are so important. You have to make sure that you're checking in with those to make sure that you're making the strides to achieve those goals. And so in these open sessions, we talked about it last week, but we're going to be starting off with a topic and then kind of kicking it off to the group to learn more and also be able to have that open session toward the end. And the topic that's at the top of my mind this week, and it's something that's been asked a couple times this week, is all around LLCs, right? What are they? Why do you need them? When should you get one? And so I wanted to start off with the basic understanding of an LLC and with the question, what is an LLC? So LLC stands for Limited Liability Company. And let me preface this by saying I'm not a lawyer. This is not legal advice. I'm also not a CPA. This is not tax advice. And I'm not a mortgage lender. So all the different caveats are in play here, but it allows you to get a little bit more protection when it comes to lawsuits and things of that nature when we live in a litigious society. With an LLC, if you are to put certain assets in there, the LLC acts as its own company. And so if you were to undergo a lawsuit and you have it set up correctly, they should not be able to touch your personal assets or any assets that you have somewhere else. So that's the quote unquote, what is an LLC at a high level. Now, the piece that trips a lot of people up is they think, hey, I need to go get an LLC before I even go buy my first property. Because if I don't have the LLC, how can I get the property and be protected? There's many other ways to be protected when you're purchasing a property, such as just getting general insurance, right? Or even getting an umbrella policy if you want additional insurance. When you look at LLCs, right, a lot of people try to get it before they buy their first property. I would highly recommend doing it afterwards because one, it's not that hard to set up. And two, the protection that you're going to get still exists if you do it after you purchase the property. When you talk about using LLCs, there's the legal aspect, which we talked about a little bit, but then there's also the lending aspect. I can tell you that from a lender standpoint, LLCs do not get as preferable lending as personal people, right? And so in my own investing career, outside of doing commercial properties, anything that was 4 units or less, I have always purchased in my own name and then quit claim to an LLC roughly 45 to 60 days after closing, just depending on how busy I am. The reasoning for that is the bank will lend to me as a person for 30 years with low interest rates. To an LLC, they're going to give you terms that are, maybe 20 years or amortized over 20 years, a 5-year adjustable rate mortgage or something of that nature that's not as favorable because with an LLC, they don't have as much that they can go after. And worst case scenario, if it's not going well, you could just shut the LLC down. Whereas if it's on your personal name, you're not going to shut yourself down. And so those are a couple main differences with the LLCs. I would love for any of the members to go ahead and join in and feel free to give your own feedback on this topic. This is an open session. But when you talk about LLCs, it's one that a lot of newer investors tend to get hung up on it. And it takes less than a week to actually get one created and to quit claim a property into it. And so I highly recommend doing it after you get your property, not before, because the lending can be affected by that if you try to buy it through an LLC, unless you're doing a commercial deal and things of that nature. Now, the other question is, when do you need one? Ideally, when you're buying your first couple properties, especially if you're doing and let me even take a step back, it's for investment properties, right? For pure investment properties. So if you're buying a house hack or you're thinking about putting an LLC on your primary residence that you're currently living at, or you bought as a quote unquote primary residence, you should not put an LLC on that because it's going to overcomplicate things significantly. Even if there's multiple units, you want to wait until you move out to put the LLC on that property when it's fully an investment property and it's taxed as an investment property. And so that's a great time to go ahead and introduce that piece. And as far as how many properties you should keep within an LLC, I personally have favored using one per asset per state, depending on how many I can get. Now, I haven't gotten up to hundreds of units. At that point, it may make sense to have multiple. But for example, in Kentucky, I have one LLC that handles all the long term rentals that we have, and all the funds go in there, all the bills are paid out of there. I have a tax account, a profit account, all that stuff comes into that account and goes out of those accounts, and it's under one LLC. For Georgia, I have two LLCs. I've got one for the short term rentals and one for the long term rentals, and then also another one for the short term rental management business and another one for the realtor business. And so this is to separate each of these so they're not all kind of co-joined together and not all at risk together. Because the last thing you'd want to happen is somebody slip and fall on a property and come after, your rental business or come after all the other properties that you have kind of linked. And so you want to separate it out by business and also by state and kind of keep similar type of assets together. Now, we're doing a major multifamily project out in Louisville, Kentucky. I can tell you that there's two LLCs for that. There's one LLC for the self-storage, and there's another LLC for the actual townhomes. And that's because it's a larger project in and of itself. And there's certain things that we wanted to include in there for our limited partners and for ourselves. But that is what I got on the LLCs to kind of kick it off. Feel free to call in and or drop any questions in the chat and we will get started. Also, before I forget, major thank you and shout out to everybody that came to the event last Friday. It was awesome being able to get together and see everybody in person. And we definitely want to do more events like that, but even just more get-togethers, right? It helps when you have that type of energy in the room together where we're all supporting each other and genuinely wanting to get better so that we can continue investing and change our lives for the future. But this is an open session. Please feel free to join and or drop a question in the chat. Okay, we got a question. What is the cost of a quit claim? Okay, so this is a great question. And I'll give everybody a second before I give the full answer. Feel free to drop in the chat what you think it costs to do a quit claim, and I'll explain what a quit claim is and then give you the answer. So a quit claim is when you purchase a property in your own name and then you move it over to an LLC, right? So what I do is I typically purchase an investment property. I wait about 45 days or so that everything can get filed and the deed can get filed with the counties that it needs to be. And then I go to my lawyer and I have them quit claim it into an LLC. And I literally sign for both parties. I'm signing for myself, then I have a different signature for the LLC. It does start to get a little confusing with the signatures. I have like a cheat sheet so I can remember. Fun fact. But personally, in Louisville and in Georgia, it costs roughly $250 to $350 to do a quit claim from your personal into an LLC. In France, welcome to the call.
Hey, how we doing?
Super good, man. It was great seeing you last week.
Yeah, thanks for inviting me. I really got a lot of insight from it. And one action item for me was about when y'all talked about the removing the PMI. So I was able to call my mortgage company and get the ball rolling there to remove that. So thanks for that information.
Dope. And just for my knowledge, how long did you own that house? And has the equity grown enough? Is that kind of why you called?
Yeah, so I've owned it since 2021 and it's estimated to be around like 325. So I have that 20% of equity in there. So I don't know what they'll appraise it at. So the next step is for them to send me a document. I then fill it out. They then send an appraiser out, and based off of that, they'll then decide to remove it.
Dude, that is amazing. And you just reminded me that I need to actually do that for one of my properties. I've been putting it off. I'm
No,
gonna do that though. I need to
thank
call them.
you. Thank you. I actually had a question for you, Neat.
Hmm.
So last night I started tracking like the income from the different properties and everything, and like how much money are in different accounts, but I'm doing using an Excel spreadsheet. And right now it's okay because I only have like two, but I feel like as I start to scale, it might get out of hand. So the question is like, how do you track those business expenses, like just in those business accounts?
So, are you using like an account? You're using Excel, right? So, I can tell you for the short-term rental business because we manage a lot. Plus, I have a bunch of them. We're using QuickBooks. QuickBooks has been
Mm,
a life changer. You can link the accounts to it, and then it makes it
okay.
easy to just like send everything. Even for like the realtor business, I use QuickBooks, and they have an app now where I have it always on. So when I'm in a car, anytime I get in the car to drive around, it tracks where I'm going and has start location, end location, and I'm able to even take mileage and things of that nature. But
Okay.
would highly recommend as you start getting going, getting something like that because it makes it even cleaner for your CPA to be able to actually help you at the end of the year in saving some taxes. And a lot of bookkeepers plug into QuickBooks. And so as you continue to grow, they can help you. And so I
Gotcha.
started using it well, no, it's been 2 years now. For 2 years ago, so I could invoice people. That's really the sole purpose I got it. Like, hey, let me do invoices. And I was like, man, this is actually pretty good bookkeeping software. Started linking the accounts and then got busy enough to where it was like, hey, we got like 10 properties under management. Let's get a bookkeeper. And they cleaned it up. And it's been awesome ever since.
Okay. Is this something where you have to like take a course on or something or like get versed about, or is it pretty user friendly?
It's pretty user friendly, and the videos that they show you for how to do certain things is pretty good, right? It's
Okay.
solid. I'd say it's easier to use than Excel in a lot of ways, right? Like
Okay.
if you're proficient in Excel and know how to do VLOOKUPs and all that stuff, QuickBooks is going to be easy for you, and it can be a lot more automated because if you have like, for example, the mortgage coming out and it's the same amount each month, you can automate that to, hey, split this out X
Mm,
ways and go to these different areas to where it's cleaner for you. Like, hey, this is the mortgage, this is the interest, this is the principal. You can kind of have that automated for you.
gotcha. Okay, cool. Thank you.
Of
And
course.
quick update, I was able to get in touch with the tenant and get somebody out and maintenance the property, so we're all good. I didn't have to do the welfare check and all that stuff, so I'm really happy about that.
Hey, I am pumped too. Believe me, we're not even going to talk about what we talked about last time, but I'm happy that everything is okay over there,
Yes,
and
sir.
that you were able to get in.
Yes, sir.
AJ, how you doing?
What's going on, man? How are you?
Good.
Super good. Super good.
Good.
Thank you for coming to the event, man.
Yeah, for sure. Actually, so for like the first 10 minutes, I was like waiting around. I'm like, where is everybody? And the email, I joined the Skype meeting and I'm just sitting there and I'm like, did they forget about today? Or they didn't want to start it with me going on to, I don't know what was going on. But then I jumped over. I guess you guys have like a Riverside FM. So I clicked on that and um, I'm here.
No, and that's on me. So was it the email or the invite? Does the invite have a Skype invite too? If it does, I need to
Yes, I
update
have.
that.
Yeah, so the email has a Skype invite and then it also has the Riverside.fm link. So once I figured out the Skype wasn't working, nobody was wrong. It was crickets. I was like talking to myself. I wasn't talking to myself at all, but there was like nobody there. So I checked the email again. And I was like, oh, I saw another link. So got it.
Done. I will get that corrected at some point the rest of this week. Thank you for the heads up. But what you got going on, man? What's on your mind?
Oh man, what's on my mind is a closing in about what, 2 weeks or so. I'm looking at my calendar.
Yes, two
Um,
weeks.
Yeah, my wife and I were extremely excited. This would be our second deal. You've helped us out tremendously with it, and yeah, we're just pumped. Just getting ready to move forward and continuing onward with this real estate investing journey.
Man, I am pumped for you. You're taking
Mm,
like almost mirror path as France here with the way that you're doing it. Moving into single with the in-law suite while renting out the other, which is amazing. And so early on, and you may have missed this, we were talking about LLCs because I got a couple questions this week around like, hey, what's an LLC? When should I get one? Have you guys explored or started looking at LLCs? AJ, you've got 2 weeks before that really pop up. But France, have you started looking into that?
No, no. Like, what's the advantage of having one?
It's really more for protection, right? It's more for if somebody sues for any reason, and knock on wood, we haven't been sued yet on this real estate stuff. But if anybody sues for any reason, you can have just that asset be the focus, right? Somebody slips and falls, and you don't have a property in an LLC, it's technically tied to you, and they can sue for anything that's tied to you, right? Your car, other houses, things of that nature. If you have it in an LLC, it gives you that type of protection. Plus, if you're going to go into a partnership with somebody on houses, it helps spell out the partnership so you have a legal document. That's really the benefit.
Gotcha. Gotcha. So now, when you're getting like, let's say, home warranty or something or home insurance, does your name go on there or does the LLC's name go on there?
Great question, and it would be both, right? Because
Okay.
technically, from the mortgage is going to be in your name, right?
Yeah.
But the title, if you transfer it to the LLC, would be in the LLC's name. And so you'd put that insurance on both, and that'd be like your first line of protection. But the whole point of the LLC, and I can tell you kind of how, my structure looks like, is to make sure that all your assets aren't linked together. And so I can tell you in Kentucky, I have an LLC for all the properties that, I personally own. And that is its own entity. But then we're doing that townhome and self-storage build. And we've got two LLCs for that, one for the townhomes, one for the self-storage, because one's going to have other investors. The other's just my realtor and I. So we got to separate those.
Okay.
And in Georgia, I've got one for each of the businesses that we're doing and one for the short-term rentals that I personally own. And it starts to get confusing after a while, and it gets expensive tax-wise because you have file tax for all this stuff. But but as you get going, it is good practice to start utilizing this for the home that you're no longer living in. That's pure investment, right? Just to protect you in case anything happens, kind of from that standpoint.
And I think you already answered it, but so you have to maintain that license like year over year, I'm guessing?
Yeah, once you create it, it's its own entity, but you do have to file taxes for it year over year. It's a lot easier if you're keeping clean books, right? And by clean books, I'm not saying you have to have QuickBooks or anything. Just have a separate bank account for the property that's an investment, right? And don't commingle the funds. That's the main thing. When you create an LLC, you need to have its own account, its own accounting, all that stuff, right? You don't want to start commingling funds to where, hey, I use this for personal, but then I use my own credit card to purchase supplies for this house, and then I wrote myself a check. Like you don't want to do that because it can get really sticky. If you do get sued, they can quote unquote pierce the veil and say, hey, this is actually, one person. It's not a separate business that's operating on its own. It's you operating it. So you just want to keep everything separate once you do that.
Thank you.
Sure. And AJ, have you had experience with LLCs before, whether it's in real estate or outside of it?
Yeah, actually I do. But before I go into kind of what I have going on, I want to ask you, so it sounds like you have quite a bit of different LLCs going on. Is it tough to kind of manage all of those different LLCs, with the annual filing, the RA services, all of the other miscellaneous fees that goes along with an LLC? Do you find it tough to manage, or do you have someone doing that for you? Like, how are you kind of managing all of your different LLCs?
Man, I believe in finding a professional and paying them to handle it. And so,
Yeah.
so we talked about it a little bit earlier, but my CPA is a rock star. And so he's the one that kind of manages all that from that standpoint as far as the tax filing. And then now we have a bookkeeper that helps keep us straight. The one thing that I do to make sure we're good across the board is I got separate checking, separate savings for every single LLC. And I set up all the automations to where automatic payments and automatic payouts are coming from that account that pertain to those properties. So I don't have to think about it. And then from there, I'm just handing the transaction record over to the bookkeeper. They're kind of categorizing it, and then the CPA is filing on our behalf. Now it does cost a little bit more to file, and it does take a little bit longer. Like this year, we had to extend because it was semi complicated, but it's worth it in the end because you do have that protection. They're all kind of separated, and if something happens with one of them, you've still got the others kind of backing you up there.
For sure. We might definitely have to chat offline, especially if you have a rock star CPA. It's never a bad thing to have a bad or a good CPA. So, but yeah, so on behalf of me, myself, I actually do have one LLC. So just kind of a synopsis of like why I have the LLC. Basically, I'm interested in three different kinds of investments right now, just as it stands at this point in time. I'm into real estate investing. I'm into cryptocurrency investing. And then I also started a side hustle, which, we'll figure out how big it's going to expand, but it's actually doing pretty well right now. I started a Toro business. So if anybody doesn't know what Toro is, that's a peer-to-peer car sharing business. You basically just, put a car out there, just like your Enterprise or any of the different rental services out there. And basically, they book it kind of similar. So basically, I guess you can classify Toro as like the Airbnb of car sharing, right? So with that being said, I started that, and the LLC was actually started in October. I started the business in July of last year. So I started out my personal car. I was really interested in, the business. I was doing a little bit of research online, and I said, hey, this seems kind of like interesting. I might want to check it out. So I listed my personal vehicle on there. I was a little bit nervous. I had no idea what I was doing. I got my first renter. like I said, I had no idea what I was doing. It was a lot of things I probably should have done beforehand to protect myself. But again, it was all the learning process. I just jumped in the water and said, hey, let's figure this out. My first guest brought my car back all in one piece, and she handed me the keys. Everything was fine. And I said, wow, this is pretty simple. And I'm sitting on my couch, just chilling out, relaxing. I work remote, so I don't really go anywhere often. And it was just as simple as that. So from there onward, I bought my first car officially for Turo, bought it all cash in, I believe, February. It took me a month to kind of get the listing going and everything. And then, yeah, so March 1st, put my first official Turo car out there. And so far, it's been doing pretty well. So I do have an LLC for that. And yeah, I just do that mainly for some of the reasons, like you said. I look at an LLC for two different reasons. As you said, protection, liability protection. And then the second thing is the tax benefits of having an LLC as well. So,
Absolutely. And we can't skip over what you just said. There's two things I want to dig into a little bit more. And thank you for sharing. One is the
sure.
Turo piece. I don't know. I think Ricardo mentioned it a little bit on Friday, but he's huge into Turo. Like he owns like probably like 10 cars. He's got like the Porsche 911, the Plaid, Tesla, a bunch of cars, but he puts them all on Turo and then kind of drives around because he likes those cars too. So what kind of cars are you targeting on Turo? And if you don't mind, because this is one I haven't approached yet, like
Mhm.
roughly what did it cost to buy a car outright and what does that return look like on a month-to-month basis?
Yeah, for sure. So it all depends on what you have to find your niche, right? It sounds like Ricardo is into kind of like the high-end luxury vehicles, that market. For me, I find something that's effective for me is a low-cost economy approach. So I'm buying low-end economy vehicles. The vehicle that I purchased was a Kia Forte. And I like those vehicles because number one, you're not putting out, some expensive Maserati or I don't know, Camaros. I'm not even into the high-end luxury cars like that, honestly, because it's way out of my price range, number one. And then number two is like you don't get the emotional attachment of it when you're listing out and you're renting it out on the platform. So like, you lease out that Camaro or something, and then it comes back with a scratch or dent. You're like, oh, what the heck, man? This is a nice car. I gotta go get the paint fixed, all of that stuff. But I think it's just less of a risk when you're putting a low end economy vehicle on the platform. And with that being said, I think, I want to attract a certain pool of renters. So for me, it's pretty much anybody who needs to get around just from point A to point B. Maybe sometime, most often, I think a lot of my guests, they basically have their car that's in the shop and, they may not have been able to get an affordable car at Enterprise or something like that. So they come to me, I have a low end economy vehicle, gets them safely from point A to point B. And yeah, I actually purchased my first official Toro vehicle for 7,000 cash.
Nice. Okay. And
Mhm,
roughly like you mentioned people renting it for, hey, my car's in the shop, things of that nature.
mhm.
Like what do you expect to make it a month on that tour car?
Yeah, so I think I have to look at my numbers. I have spreadsheets and everything right now, but for the market that I'm in, I'm looking to bring in anywhere from like, 800 to $1,000. Now, that is actually pretty good. It all depends on what your expenses are, right? So since I own my vehicle outright, I don't have any monthly car payment. All I have to do is pay for car insurance, which is only roughly about $70, and then a few different car washes sometimes throughout the month or whatever. So what, give or take. So my expenses pretty much are about $100, give or take. And then I'm bringing in anywhere from, like I said, 800 to $900, and then you do the net, and basically like I said, I think it's pretty good for that kind of low end economy vehicle on a monthly basis. Now it may look like something completely different for some of those luxury high end vehicles. Like I said, I'm not really into that market. I think it's a little more risk with that, but maybe that may be something that we can bring in Ricardo and have a discussion with him about. So he may have a little more knowledge based on that.
No, that's pretty incredible though. Even if you were
Mhm.
to say you were to cut that 800 in half and say, hey, profit is 400 after all expenses, that's still an amazing return, right? So I
Right.
like this. Like the car is paid off in what,
Two
like
years
less than
roughly.
18 months, something like that, right around there, fully paid off.
Right.
That's
So
pretty cool.
yeah, so when I'm looking for my vehicles, I kind of basically do like a reverse engineering approach. I look for my vehicles everywhere online, maybe Craigslist or Facebook. Facebook is definitely a really good place to look for used vehicles. And pretty much I take my purchase price. So let's say anywhere from $5,000 to $8,000. I think you can realistically get a low end economy vehicle that's reliable in that price range. Kind of try to steer more near the $7,000 to $8,000 range, because when you get to like the 5K and maybe somewhere around there, you have a lot of issues with the vehicle and everything, things of that nature. But I basically take that purchase price, I divide it by how many months I expect to get my 100% ROI in. So, for example, my $7,000 Kia, I was expecting to get 100% ROI in about 8 to 9 months, and then divided by that, then that gives me my monthly amount. Okay, that's the amount that I need to bring in. Then at that point, you take the occupancy percentage, whatever that may be. So I think my cars are, or anybody's cars, they may have a different occupancy percentage. For my vehicle in particular, I think about 23 days is a good rate in about a month that it would be rented out. So at that point, I'll divide it by 23 days. I get that number. And then, yeah, you kind of just have to, it's a complicated process. Maybe we could talk more offline about it. But basically, you get down to a daily rate, and then you look at the market and figure out, okay, hey, like, is this a daily rate that this vehicle can go for on the market? Yeah, so it may sound a little bit complicated at that point. Like, I may not have described it the best way as possible, but it's a lot of different market research elements that go into it. Like I said, I'm just now getting started. I'm looking to buy more vehicles in the future, but I think this is definitely a short-term play, and I'm really excited about continuing on the Turo business.
No, I like. Go ahead, Franz.
Oh, I was gonna say, on the topic of protection, this sounds really cool. Just
Yeah.
going back to protection, how do you maintain like your protection besides like insurance? Like, how do you make sure you're protected in this whole process?
Right. So if you call up any insurance company and you say, "Hey, I'm renting out my vehicle on Turo," they're automatically going to tell you, like, "We're not going to protect you. Like, you don't have any insurance with us." But by law, you have to have insurance. You have to have personal insurance for that vehicle, right? So, for example, I mentioned I pay about $70 for my Kia. So basically, with that, I have that insurance, and then you actually have a protection plan with Turo, right? So I say protection plan, right? Because it's not insurance. That's a key aspect of this. Toro doesn't operate or disclose themselves or claim themselves as an insurance company. Basically, you have to follow their rules. And when I say follow their rules, you basically have to take all of the different pre-trip photos and then the after-trip photos as well in order to get your payouts. So that's basically how you get protected on Turo.
Pretty cool. And then based off of what you're saying, I got that you want to find your niche, you want to have a target audience, but how do you set yourself apart from like the other pool of Kias that are out there?
Right. I really don't think there's any way that I know of right now besides really just offering great customer service.
Okay.
The ratings on tour are extremely important. I'm an all-star host, so basically what that means is you have to hit certain metrics, and when you hit those metrics, your listing actually shows up as in a higher priority when people go out to book your vehicle. So I think that would be one of the biggest keys. And then also just looking at the different price changes throughout the different months. I'm not going to price my vehicle at an extremely high price, knowing that, other Kias are, for example, are renting at a lower price. So I want my Kia booked out, and I want it booked out majority of the month.
Gotcha. And similar to like Airbnb, does it have any type of like automated pricing for you, or you kind of have to set it up for yourself?
They do have automated pricing. From what I found so far, they kind of lowball you in some ways. So I think I was listening to one podcast and he was talking about that with Airbnb, something that I kind of dislike. So I pay attention to basically my calendar. I set the pricing manually. Sometimes I do the automatic pricing, but I think it really just depends on the month. For example, I think when there's holidays like Memorial Day coming up, all of the different holidays, you definitely want to jack up the price a bit because the demand is there. So I think it's justified to be able to bring up the price a bit.
Very cool. Thanks for sharing. Yeah.
Yeah, for sure.
No, that's pretty awesome. And like Turo's one where I haven't broached that subject yet or tried it, but one of the owners that we manage for from an Airbnb perspective had this BMW. And the way that they marketed it was one on Turo, but two, they actually put pictures of it from the Turo listing at the end of the Airbnb listing. And we had like messaging in there saying, hey, if you want to book a car, da 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 da, we can have it on site. for you. And that worked out. There was a bunch of people messaging us saying, hey, we're going to book your place and we also want to book the car. So, I've thought about, man, is there ways to, I'm a huge fan, and I think we talked about it before, of adjacencies, right? If you're doing one thing and you like that thing, what is something right next to it that you could do to kind of build around it? So, for example, hey, I'm a realtor that likes to invest. Okay, so now you're getting some realtor commissions that you can now use toward investing, and you're seeing deals even before they hit the market, right? It's kind of cool. And then, okay, I like to invest and I'm managing a bunch of short term rentals, build a short term rental management company so you can manage more, right?
Right.
And so when I look at the Airbnb plus Turo, what intrigues me is like, man, I don't know if it makes sense, but somebody could Uber to your house and then boom, now they've got a car they can use for the whole stay, and then they can just return it back to the house and kind of go from there. So have you ever tried, or have you thought about something like that?
Not definitely not. I think you're really creative and trying to piece it all together. Right now, I think I'm just trying to start out pretty slow. Like I said, I don't want to overextend myself. Like I said, I'm in three different spaces, trying to invest in real estate, cryptocurrency, and then also the within Turo. But in terms of, trying to integrate and sync them, I haven't actually thought that far. So that may be something I may want to investigate as well in the future. That
Pretty
sounds pretty
interesting.
cool.
Yeah.
That's fair. If you guys are successful with it, please let me know so you can help
Yeah,
me
for sure.
out.
I
but
see you over
but
there jotting down notes to take. You're definitely trying to peep game. So
hey, but to that point, the last thing you mentioned was crypto, and I know this is a
mhm.
sore subject for many, including me. I can tell you that I put in 5 grand when it was at 60K. I have no idea what it is right now, but definitely not 5 grand. I've lost a good portion of that. I just stopped looking. Thankfully, I didn't do more. I wanted to do more, but I was like, nah, let me go calm. But how is it doing right now, and what type of crypto, like, what realm are you investing in? Are you investing in the actual coins? Are you investing in some of the back end? What are you doing there?
yeah, so me, I'm kind of like a set it and forget it kind of person. I really don't feel like I have the time to, or I guess you can make time for anything you want, right? But I don't want to spend a ton of time doing market research into the newest crypto coins and things of that nature. There's so many different coins that come out literally on a daily basis. I stick to what I like and what I know, the fundamentals, and that's basically Bitcoin and Ethereum. So I'm setting aside just about a small percentage of my monthly income, and I'm pretty much just applying it to that on a monthly basis. And I'm not really looking at it. I'm not looking at the markets. I feel as though that Bitcoin and Ethereum, they have just so much potential to do different things. Bitcoin being more of like a store of financial currency that, people can trade and use to buy things of that nature. And then in terms of Ethereum, right, you can use that in different applications, right? I don't know if you guys hear about like the DeFi space, decentralized finance. There's a lot of different applications you can use that for. So I think Ethereum is more of like the jack of all trades, whereas Bitcoin is like kind of like that stable crypto, right? And I don't think you can really, do anything wrong by just investing a little bit of money into it and then seeing kind of where it goes from there. I think it has strong fundamentals, core values that firmly believe in, and I just want to see where it goes from here. I have high confidence in it. So,
You're honestly doing it right with the dollar cost average, right? That's how I do
mhm,
like Vanguard and things of that nature. I was just one of those guys when I saw it going up, I just threw money in and I haven't really sat down to take a look.
right.
But Franz, what about you? Are you involved in the crypto?
I was at the beginning, and then I made my exit, and that was it. I haven't gone back in. But I had a follow-up question. So, have you exited any of your plays yet, or are you just like in there for long term?
I haven't exited a thing. And I think that's what people they've kind of strayed away from the fundamentals. I think it's very similar to real estate, right? Like, prices are high, and especially like the past couple of years, everybody wants to go rush in and buy, right? But look at it, you're buying at some of the highest prices to date, right? So, people are talking about it, influencers are talking about it, the news media outlets are talking about it. But why wouldn't you want to invest that same dollar if you believe in the asset when the prices are down, right? And right now, if you look at crypto and, so I'm going to separate crypto and then Bitcoin and Ethereum. That's how I look at it. Because you have crypto tokens and all the different nonsense out there. But like I said, I like Bitcoin and Ethereum. Those are down right now, right? So if you really believe in those things, why wouldn't you take your same dollar and invest in it right now when you can get it for a discount? So those are my thoughts on that.
Makes sense.
You are spot on. I do believe in it long term. For me, it's just when is that long term going to come to fruition? I love what you're doing though, because that's like just staying consistent. Dude, we're gonna talk 5 years from now. I'm like, dang it, I should have started investing right
I
now.
should have.
but what I'm gonna do to kind of try to back it up is continue to buy real estate so that when we switch over from the dollar to Bitcoin, I can just collect the Bitcoin then, and have my tenants pay me in Bitcoin. So that's my
Exactly.
end goal in mind. But no, no, this was good. This was good. Anything on top of your mind or anybody else in the chat that you want to discuss? We got about 5 minutes left. Anything top of mind?
I had another one that I wrote down for you, and
Sure.
you also, AJ. So I've done like a wholesale deal before, and I want to do another one, right? But similar to like when we were talking before about buying a second property, I just don't know how to go to that second deal, right? So my question to you is, how do you make that second deal, and maybe talk about like your experience as an agent or like your sales world or what have you?
And you're talking about specifically for wholesale, or you mean even just purchasing your next investment property?
Yeah, or like as like an agent, I know you did like a one sale, but how do you go to that do that second sale?
Man, so it's all about momentum, right? And really it's about staying top of mind. Because at the end of the day, there's a lot of agents out there that all do, well, I'm not gonna say they all do a great job. There's there's agents that do a great job and other agents that do not. So one, you've got to sharpen your skill set. You've got to know what you're talking about and kind of be sharp from that standpoint
Okay.
and leverage some of the learnings that you've had in your past to help others. But two, you've really got to niche down. As an agent, you can help a lot of different individuals, sellers, buyers, investors, non-investors, things of that nature. But in my mind, if you're everything, then you're kind of nothing in people's mind. And so I think we've mentioned it a couple of times. My niche is investor friendly realtor, right? If you want to talk about anything investing, if you need whatever contact, I should have that because I'm in the game as well. And so that's what I want people to think about. And that's kind of the energy that you put out there. That being said, I have helped retail buyers. Absolutely. I helped somebody buy a townhome on the Beltline for like 800K because they just wanted to be on the belt. They're like, hey, I want to be on the Beltline. Don't care about any of this stuff. Like just want to be on the Beltline. Like, hey,
Yeah,
let's go
yeah,
do
yeah.
it. And I've helped other people sell properties that are not investors as well. And obviously will help individuals. But the wheelhouse is, hey, investor friendly. This is what we're focused on. And so you can see even like these weekly meetings and things of that nature. It's a way to reconnect and also just to keep updated with kind of what's going on. Where can I step in and help? What do I need help with? Because honestly, these meetings give me a lot of energy to keep going as well. But it's trying to find ways to trying to think of a good way to phrase this, but find ways to reiterate kind of the niche that you're in a non-threatening way. We'll put it like that.
Gotcha. So find your niche, know your market, and reiterate it to your audience. It sounds like.
Absolutely. Right. And so even like the members of my team now, when we have our weekly calls, because I meet with them one on one each week as well, all we're focused on, especially the younger and newer kind of agents, is hey, let's run numbers. Like, you tell me if this is a good deal. Hey, is this a good
Nice.
deal? Hey, you tell me. Here goes how you run the numbers, right? Just to make sure that they're well versed. Because if I'm sending them out with clients, we got to make sure that we're delivering the same experience across the board.
Gotcha. And then I'll pivot over to you and Turo, AJ. How do you get from like that first car to the second car that you recently bought in February?
Excellent question. So I'm actually kind of struggling between my next move right now. And I always want to be adaptive, right? Like I did have an initial game plan, and I think we always have an initial game plan about how we want to move and what our strategy is. So for my strategy, it was pay the full price for that vehicle, get my 100% ROI in about what I estimated 8 to 9 months, and then after I recoup that cash, then go out and basically do the same thing, rinse and repeat. And at that point, then I'm having two vehicles out there generating me money, so then I can kind of keep multiplying the process like that to evaluate my numbers and if I'm actually reaching that goal. If I kind of feel like I'm not within the next few months, I may want to take a next step and think about potentially financing a vehicle. So then at that point, I'll have two vehicles being rented on the platform sooner. The only caveat with that is now leveraging a little bit more risk with financing another vehicle, right? So I have another expense. Right now, my vehicle has pretty good. It's being rented out for the majority of the month, which is great and everything. But I have to look at it from a standpoint, if I have a monthly payment on this car and it's not being rented out, then I'm liable for this car payment, and now I'm kind of stuck, and I have to come up with money for my personal budget and things of that nature. So that's kind of my game plan right now, is just to kind of continue to evaluate as I grow in the business, and then kind of just making a move and see what's the best option for us at that point. I am starting to lean heavily towards potentially financing another vehicle, but like I said, we'll have to see where things are going right now.
I got you. So you have your plan, you essentially execute on it, and then you course correct as needed.
Basically, yes. Yeah.
Gotcha.
Oh, I love it. I love it. And the main thing that I see with both of you and a lot of individuals that join this is just the action piece. Like many people talk about it, but just being able to take consistent action, that sets us apart from so many people, right? We're going to make mistakes, absolutely, but we're going to learn quicker, be able to course correct, just as you just mentioned, Franz. And at the end, be able to make it further than a lot of people. And so that's why I'm constantly telling myself, like, hey, just take action. It's going to be fine. And so no, I'm pumped to see kind of where we can take this thing throughout the rest of this year. I'm excited for both of you guys. Franz, you already got it figured out, man. You just collect the checks over
Get
there.
out of here.
But
You gotta figure it out. So I'd be like, you need.
but AJ, I'm pumped to see you get started here soon, especially in the real estate space. And no,
For
I
sure.
appreciate you guys joining. And I hope that everybody who tuned in has an awesome rest of this Wednesday. And we will catch you guys next week.
Catch you later.
See you guys.
Take care. Thank you.